Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. First of all, we got to knock out our standard disclaimer. Tonight's topic is how to choose the best futures instrument for your style of trading. We're going to cover that along with some market correlations and lots of other good things tonight. So it should be a good one. Stick around. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Alrighty then. So here's how I'm going to do this. I'm going to get over to screen one where I have a couple of charts ready to go. And I'm going to approach it in this manner. Before I do that, though, I'm going to take a quick show of hands from the team here tonight and ask you, do you currently have a favorite instrument that you trade now? And if you do, what is it? If you trade futures, or you're in sim mode or practicing or looking into trading futures, what instruments do you currently trade that you like? Okay, we'll get some interesting comments. We got a lot of ES and crude. Equally bad on all. A couple of NASDAQs. Okay, good. I'm going to address that one. Sandra says it was ES, but now I'm not sure. Yeah, ES was pretty choppy today. All right. So right now, what are these equity markets doing? Are they going up or down? What do you think? Why are they going up? Any idea? Anybody have any idea why they're going up? Obviously, you can see it's pretty clear that they are going up. Why are they going up? I mean, you know, in the case of let's talk about YM here. By the way, for those of you that are completely new to this, let me back up for a second. I'm sorry, my apologies. We got a lot of people excuse me, sorry, here visiting us on an open house this week, and if that's you, welcome, welcome. If you're on a free trial, welcome to you too. My apologies. I need to step back and remember that we have a lot of new folks in the room here tonight. So let me just take 1 second. Let me just take a minute here and explain what you're looking at, because it might be a little confusing to you, especially if you're looking at it for the first time. We trade the intraday volatility of futures markets, and so as far as the live trading room is concerned, if you came into the live trading room and you're coming in there, which is on Gary's computer in Oklahoma, we have the E-mini S&P futures in there, which is ES. That's 1250 a tick. All of the equity futures are on the December contract. So futures are a little bit somewhat like options in the fact that they have rollover and expiration dates like options do. But the difference is they don't have all the, the betas and the thetas and the data and the zetas and all the rest of that stuff. It's just straight up sort of mirror of the cash and spot markets. The other one we have in the room is the RTY, which is the Russell. And that's the E-mini Russell futures. We also have, of course, if you've been in there, you know that my business partner, Gary heavily trades crude oil. And of course, we also trade gold, and I'm going to show a gold chart in just a little bit here. Gold futures, GC right here. So we're connected to a data feed to our broker, and we trade 4 range bars. That means each bar is 4 ticks. Now, if you just connected to the data feed without our indicators on this chart, you would just see bars more or less kind of going up and down. It'd be it'd be hard to see whether you want to be long or short or where you want to get in. Excuse me, I'm going to tickle my throat. Take a sip of tea, hold on. So the indicators we have from us, Viper, that are on this chart are the background colors. Let me get the cursor on here. Background colors, bar colors, red, yellow, and blue. Power meter, which is the 4 different trends on the chart. Predictors are the swing levels, right? We got the object trader alert. You're in an uptrend, you turn on the long alerts, right? If you're in a downtrend, you turn on the short alerts. There's different types of trade entry criteria here. And when you're in an uptrend, as we are right now, and it's, by the way, it's due to there was an announcement by Larry Kudlow after the market closed that they're very close to making good strides on the China deal, which the market likes. Anything positive on China trade, any comments in that manner are going to push markets higher, and that's exactly what you have here. So this would be an uptrend, and characteristics of an uptrend are a solid green background. Oh, and of course you have the mid band. You have the 8 bands. We call these the bands. 1, 2, 3, 4 bands below a thick line here, which is called, of course, the mid band. And then we have bands 5, 6, 7, and 8, being the outermost one here. And this sort of sneaky snake looking line is called the stealth. And we use that a lot of times in trail stops. And the thin green line is line 6, and the red one is line 2. So that essentially is our indicators. Now, here you can see when you're in an uptrend, as I said, the background is solid green, and the mid-band and all the bands are stair-stepping up, like that, right? Stair-stepping up like that. When you're in a downtrend, and this is just a very short, quick one, we can see the opposite is true, where you stair-step down and the bars are predominantly red, like that. Now, there are the third market scenario in terms of how a market can be performing at any given time is what's called range bound or chop or consolidation. And a good example is that the equities at the open of the market at 6:30 Pacific today, which looks something like this. Very frustrating. You know, characteristic of a sideways consolidation are striped shirt kind of looking background where there's no consistency in the color. The bars vacillate between red, yellow, and blue, red, yellow, and blue, red, yellow, and blue. The swing levels for the top and the bottom are all pretty close to each other. The mid-band and all the bands are primarily flat and sideways. And so very early on, this is even before the market open. Here, let me just put a line on here. So just adjust your time to where you're at, to your local time zone. But I'm here in California, so Pacific time 6:30 open the equity markets was right about there. Gary opens the live room, as you know, at 5:55, so that would have been somewhere over here on YM. Now, just a word, and I'm going to spend a lot of time today talking more about what does the term volatility mean? When somebody says that, gets bantered around all over the place, right? Oh, that market is volatile. Oh, geez, we don't have any volatility today. What does that word mean? Volatility. When somebody says that, what does that mean? Volatility. The word volatility. Here, let's write it right on the chart here, so we all get. It's tossed around all the time. What is the word? What does that mean? Volatility. So I'm going to put this right on here. Anybody know? Anybody have any idea? Is it just a funny word somebody made up one day? Equals what? Wouldn't that be like the movement? So the movement of an instrument? let's define it like this: how large or small the fluctuation or movement of in our case, it could be anything. It could be stocks, Forex, it could be anything, Bitcoin. In our case of futures instruments. So if somebody was to say to you, you know, that instrument has very, very low volatility. What does that mean? Somebody says that instrument has very low volatility. What are they talking about? What does that mean? Low volatility. It means it doesn't move a lot. In comparison to other markets, its action, its price action, its movement from top to bottom and throughout the course of a day or trading session is smaller than other equivalent markets. So let's look at some examples. Let's zip to right now at the market that's going on right now as we speak since about 10:30 to 11 o'clock this morning, and look at what YM has done. Let me see if I can do this in a better way here. Hold on a second, try to get this set up. Yeah, that's better. Okay. Push this up here, out of the way a little bit. Put this over here so we can just sort of keep in mind what we're talking about here. All right, so if we were to look at the movement, yeah, bonds, ZB and ZN, the bonds and the notes futures are what would be considered very, very low volatility. So you have instruments that have extremely high volume, so you might get 500,000 to 750,000 contracts traded, and so the slippage is good and there's great liquidity, meaning that you can get filled very quickly and you can put large orders through like 100 or 500 lot and you'll get filled, bam, very quickly, okay? But if we looked at a ZB chart, it would be going sideways almost all day long, and you get a little bip up for like 10 minutes, and if you miss it, you miss the whole thing. Now, just looking at this chart here, without doing any measurements of price action, would you say that ES, the one on the right, E-mini S&P futures, are more or less volatile than YM? M would be more, L would be less, and you've got 5 seconds. Is this chart on the right, ES, more volatile or less volatile than YM? Well, I can tell you one thing. It's not the same. if you're thinking that's a trick question, no, it's not the same. It's not even close. Okay, so let me help you out. It's okay. This might be new to some of you, and you're trying to understand it. So we'll help you out on this first one. When the bottom of this, when it got a double bottom on YM, it was around, I don't know, call it 27,640-ish, right down here. And now you're at 20. Well, you just cleared 27,840. How many ticks is that? How many ticks from here to here has this instrument moved? 200 ticks. 200 ticks straight up. Now, let's go do that same exercise on ES. By the way, each point is how many ticks on ES. Does anybody know that? So if I go from 90 to 91 on ES, how many ticks would that be? How many ticks are per 1 point? Does anybody know that? If you trade ES, you should know it right off the top of your head. 4. Okay, cool. All right, so let's say that the bottom on ES was, let's use a round number. Let's just call it 83-ish. And right now you're at, well, you passed 03 there. That would be 20 points, right? From 83 to 03 would be 20 points or 80 ticks, yes? And now we're up here at 06, 08, so that's another 5, 10. So you're somewhere between 90 and 100 ticks from the very bottom here. So from a volatility point of view, YM in this particular move is twice as volatile as ES is. Now, from a dollar point of view, which one is better? Does one make more than the other? Well, let's do some quick math together and figure this out. Okay, let's see. If I was to ask you right now, would you rather have taken YM long with one contract or ES with one contract? Which one would make you more money? All right, well, let's figure that out. Let's do that together. So we already know it's twice the movement. 200 ticks versus 100 ticks. So it's twice the volatility, right? Okay. All right, well, let's do some dollar calculations then. Okay, so over here on YM, I would say that we had a YM long trade. We all see that. And it was up, I don't know, we're using round numbers, 200 ticks, plus or minus a few ticks here and there. At times, well, I can't remember. What's the dollar value per tick of YM? I can't remember off the top of my head. Anybody know what that is? What is that? What's the dollar value of YM? I'll tell you, I'll give you a hint. It's right in between 4 and 6. What would that number be? Yeah, $5. Okay, good. So this run for one contract, if you bought the absolute bottom to right now, is approximately $1,000. Give or take a few ticks. That's pretty good. Now over here, we said that we're at like 90 ticks or 100 ticks on the ES move. But how much is ES worth per point? Well, we said we had 20 points to here, right? And we've got another 5, so that's 25 points. So let's do the math here. So now we have an ES long trade, right? We said let's use points because it's a little bit easier. 25 points times what's it worth per point? I gotta put something in here. Anybody know what our friend little old ESer's worth here per point? What's that number? Anybody? 50. Good. So 50 times 25 is how much? Now wait a minute. Wait, Charles. What are you trying to tell me here? What the heck are you trying to tell me? YM went twice as far. You should have made twice as much money. Look, it's 200 plus ticks, man. Come on. You're telling me that ES moved a little less than half the movement and it made more money? That makes absolutely no sense at all. Now, why is that? Well, because it's $12.50 a tick. It's more than twice the size of YM, right? So what it comes down to is this, and I'm going to show you a couple other ones here too. I'm going to compare Russell and NASDAQ, and we're going to do some very similar calculations where you can get in here and start to make some decisions. So all of these instruments behave very similar to each other in the fact that the algorithms that the big boys use to run their scripts against all these charts, if you put all these charts kind of right next to each other, they're going to look a lot alike. Now, when it comes to ranges, let's step back and look at the range situation here. And this happens a lot on ES. So if you're considering ES as a possible trading instrument, you're going to have to be prepared to live with this. It's days that go like this. Today it was in a very tight range all morning long, almost barely untradeable. Now, you have to trade ranges differently than you trade trends. Trends, what we do is we wait for pullbacks and we enter on retracements long or short. you can normally at or around the mid band. That's kind of our go-to trade, right? Our go-to trade is at or around the mid band. So for instance, if you have a case, let's look at YM as the example and see if we can find a couple long trades over here real quick. Then we'll come back and look at the range. Okay, was there any pullbacks on here in this up move that could have got you in? Now, most of you know, and if you're brand new, it's okay. It's pretty straightforward. We have 3 types of trade entries. If you want to just boil it real down to kind of just the simplest, like Charles, look, I don't need to know 15 trade types. I got a bad memory. Just give me a couple of 3 of them, okay? Just give me a couple 3 trade types, and I'll learn those, and I'll just go run with that. All right. Trade number 1 is at or around the midband. So it's on the midband itself, or the band above or the band below. In the case of the uptrend, a minimum criteria trade would be if a market enters this area right here, just under line 2 and 6 and stealth, the green line right there, and a deep retracement in an uptrend could go as far as down to line 2. Mid-band entry, minimum criteria entry, deep entry long when you're heading up. So by that definition, then right here, you would say that you had your first mid-band long entry, yes? All right, now that you know what you know, let me show you a couple other things and ask you a question. How about there, and how about right here? Are these 2 boxes minimum criteria long entries, yes or no? Those 2 boxes, 5 seconds, 4 seconds. This is the Y or an N. Cast a vote. Boop. Nope. Boop. Y. Yes. 4 seconds. Here, I'll help you out. I'll give you a couple more while you're thinking of that. 3 seconds. Two seconds. Yes, of course. Why we just defined it right here? I just put a box like less than 2 minutes right there, right there. That's a minimum criteria. All you got to do is go below the green stealth and close below the green line 6. Once you enter this area, which these bars, these, and these bars all did, you have what's called a minimum criteria long entry. The yellow bars in this box came to this bar right here actually almost wicked the midband, but you entered the band just above the midband, so there's a midband long. Let's continue on up. What type of trade is this one? Midband or minimum criteria? MID or MIN? 4 seconds. That's how you got to be able to look at these charts. When I give you these time frames of 3, 4, 5 seconds to answer something, you have, when you get really good at doing this and you learn the system, right? You'll just look. You can get to this point. We have so many traders over the years that are with us, hundreds of traders, literally all over the world, that have learned our system that can instantly look at a chart like that and tell you precisely where the trade entries are. It's a midband. Good. It has the bars have entered into the band just above the midband. Yes, of course, that's a midband one. All right, how about here? Let's do one more. How about right here? How about that one? Well, did you come below line 6? Yeah. Did you break below stealth? Close below it? Yes. Yeah, that's a min. There you go. There you go right there. All right, so that's good. So anyway, back to let's go back to the range issue. When you're trying to decide an instrument to trade, you have to look at a number of different factors. Okay, and the main ones to consider are, whether the movement, the size and the breadth and the depth of the movement, and the nature of the pullbacks and the way it forms its support and resistance levels are in sync with your style of trading. The rate of movement of the price. Some are faster than others. NASDAQ's a ripper. Old Russell, Roosty Bird can be a ripper too. If you've traded it, you know what I mean. It's fast. We'll show those charts in just a minute. ES. So if we were to rank from slow to fast in terms of price movement, ES would by far be the slowest of the 4 equities. The slowest. It's a little creeper, okay? You know, sometimes it takes forever for these bars to form. And sometimes you get these extremely tight ranges that are just mind-numbing that you might as well just go look at something else because there's just no money here. And the reason I say that is that even though it meets the minimum criteria of 20 to 25 ticks in height, because it's almost 30 ticks, I know that because it was in it all morning, and I trade it, then in order to get in here, you'd have to be fading the bottom and fading the top, and you do not take mid-band trades in a trend, in a range. You see that there's no meat on the bone here from the mid-band. By the time slippage and commission you get in here, there's nothing here. This is not an instrument that should be traded. And once you know that in the pre-market, and it continues into the opening of the market with 630, which is right here. In fact, you probably heard me do a couple quick calls on it, and then I stopped calling it because I just stopped trading it. There's just nothing here. They were waiting on Fed Chairman Powell. He didn't start talking until 8 o'clock or something, didn't he? Yeah, so you're just range bound. Now let's look at this range over here. Is the YM range more tradable? And the difference is here is that ES, and you might like this about ES, this is one thing I do like about ES, is the fact that when you have support and resistance, it tends to respect it pretty well. In other words, all those swings are going to be pretty darn close to each other. Now, you don't see that in some other instruments, like right here, for instance. You can see that, you got a couple outliers here. You got this one, you got this one. This one didn't even get close. So if you're looking to buy support, and you want to have a zone to do it, you got to have a pretty big swath of entry area to try to get long from down here, like that. See that? Likewise, on the upper side of the range, you've got swings that are just a little higher, a little lower, a little bit, you're sitting on it for a little while. And so your entry zone at the top for shorting would be something like that. And so the meat of the trade then becomes the difference between these two boxes or this right here. So how much meat is on that bone in the middle of the range for YM if you're taking longs and shorts? Well, let's do a quick look. Look-see. Let's say you got to look at 14 to get long and cover your short and 40. So that's 26 ticks. 26 ticks. That's not a lot of meat on the bone. That really isn't. Now let's go over here and look at ES. How much meat's on that bone? Well, the bottom of the box here is, I'll call it 89, just to have a round number. It's 89 and a quarter. To 94 is 5 times, what is that? Yeah, 5 times 4 is 20. So, add a little slippage and take some commission out. There's just not a lot to get here. How many of you like ranges? How many like to avoid ranges? Show of hands. Do you like ranges? Do you trade them? Just give me some ranges. I love me some ranges. I'll take a range all day long. Or I hate ranges. I never make any money. I don't want to trade ranges. I avoid them at all costs. Which camp are you in? You don't know? No? Some people, ranges are great. Bill likes them. Okay. John avoids them. Stevens, no. Bill would like to know how to trade them. I just showed you how to trade them. I just did. I just showed you. You fade, you put a line at support, you put a line at resistance. You fade where that is on your entries. I just drew a box on both of them right here. The entries are here long and the entries are here short. So, short, long, short, long, short, long, short, long. Here's the top of the range. You're fading the top. Fading means you come, in order to get in short, you enter here. You don't buy or sell the spike because you never know where that's going to be. It has to come down out of it. And you get long when it comes back up out of the box. So here's a long example here. Here's a long example here. You don't make much money by the time you get in and you get out and pay some commission. You're really, a broker's making money on you there. And when it breaks out, that usually the last trade on your not every time, but a lot of times when you're trading a range, when it breaks the other direction, if you're long and it breaks support, you get a stop out. Now, in this case here, if you traded the methodology I showed, where you're boxing the top of the range and you're boxing the bottom of the range, and getting long when it bounces, then you never got a long over here. See this? That last bounce, you got one here, but you did not get one here. This is where it broke. See it? There was no bounce. That was no long trade. It was never filled. I personally, look, I've been trading for 24 years. I started trading in 1995. I know my style. I know what I like. I know what I'm good at. And guess what? I am not good at ranges. I just know it. I don't even really try it anymore. But you know what? It's a good still. If you can learn the skill set to trade ranges, they come along very frequently. And I know a lot of traders who can trade them very well and make a lot of money getting in and out of those ranges like that. And then you can leverage up, put more contracts on, get through the range, and you're done. You don't even need to catch. But it's almost a different mentality than a trend move up or down, right? You can see it's a very different mentality because you have to be able to sort of quickly see the top and bottom and then make the decision whether you're taking shorts or longs, and then just trade it. All right, good. Okay, so let me get two more. Let me pause the screen. Some of you trade NASDAQ and the Russell. I want to put those charts right next to each other and discuss their volatility. The bottom line comes down to this while these charts are loading, is in all fairness to yourself as a trader, the proper thing to do, I think. Oh, I did want to show one other thing on these two correlated charts before I change. Stand by. Let me get over to hold on just 1 second. I forgot. I want to do one last thing before I switch. Hold on. Let me just do this real quick. There is some benefit of having a different chart accompany your ES trades. Let me explain. When the news came out of good progress on the China trade deal, what happens is, and I'm not making this up, this is true, I know for a fact this is how it works. There are NLP, natural linguistic AI programs, that read the news. They read the news and they interpret whether it is a positive news or a negative news. And in this case, positive trade with China, deal progress on the deal. NLP reads it, the algorithm scripts reads it, they interpret it as a positive news, and they kick in what's called buy programs. So if I was to put volume bars down here, you would see that they'd mainly be blue. And that's how you tell, just huge buy programs. Buy, 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 buy. And what happens is that it's called news bots connected to these algorithms. Sometimes they kick in on an instrument before they kick on into another one. Let's look at an example right here. Here you got a bottom on YM at 1057, and by 11 o'clock, you were all the way up here. The buy programs had exerted themselves, and you were well on your way to a huge move, yes? Now let's come over and look at ES here. Let's look at this bottom. Well, I'll be darned. Haven't we seen that number before? That looks strikingly familiar. Well, let's go back over here. What was that number on that apex down? Pretty darn close, right? In fact, it's almost exactly the same. That's strange. But let's zip forward to 11 o'clock. Let's zip forward to 11:07, 11:01, 11:07. Here you are almost at 11:10, a full 10 minutes later, and ES is just breaking the top of this range, right? Where is YM at that same time? Well, here's 11:07 on YM, way up here. So when you look at the two charts next to each other, which one of the two led the rally up? Was it YM or ES? Y or E? Here's 11:07 on this chart, right here. So by the time 1107 came on YM, you had gone from here to here. By the time you got to 1107 on ES, you'd gone from here to here. Which one led the rally between the two? Did YM lead ES, or did ES lead YM up? Yeah. By the time 1107, the ES is finally breaking this top. You know, YM had run all the way from the bottom at 40 all the way up here to 760 ticks. This is 60 ticks of movement here. You know, you're looking at the equivalent over here is probably like 20. So, if you're sitting here and you are watching a YM chart that is going to the moon off of this news, could you safely load up and buy ES as it broke up through here? Could you do that? Should you do that? Yes. So if you're ever wondering what I'm doing over here when you hear me in the live room, that is what I'm looking at. Now let me throw another thing in that's going to help you. If YM and ES are heading up very precipitously, which they are, off the news from the news bots, we know that the buy programs are still intact. What should gold be doing right at this minute? If I was to draw, if I was to take a gold chart and drag it over here and show you what it looks like right now, what would you anticipate? Would it be, would the gold chart that I'm going to drag it, I'm doing it as we speak, would you expect that chart to be going up or down when the equities are heading up? Does gold head up? Is it an inverse relationship or is it a mirror relationship between gold and the equities? Does anybody know? Okay, you ready? I'm dragging it over. Here it comes. What are you going to say? What's gold doing right now? And I'll do a big reveal for you here, okay? Down. It's an inverse relationship. That's correct. Gold should be falling. Now, look, you've seen in the room, you know, I don't know if to say a million times, but scores of times where sometimes where the markets are correlated and their life is good with the world, everything's moving like it should. And it is. Of course, it's going down. Now, let's look at a couple other things here, and let's see if they're just sort of random chance or you think there's some kind of programming behind it. Look at this time right here. What is the apex of the peak on gold in terms of the time when it happened? You seen that number before? See it down here? 1057. Wasn't that the apex of the bottom here? And the apex of the bottom right here? Wondering well that. How could that be? Is that magic? Is that voodoo? If you're looking to buy ES here and get long on this break, and YM is all the way up here 60 ticks, fully above the entry from down here, and gold is breaking down through the midband here, could you safely short gold and get long ES? Here. And here. So that would have been approximately, well, it was a minute plus or minus, they call it 11 o'clock. And this break occurred right a little bit later at 11:02. At 11 o'clock, you were still up here. Could you be shorting gold as it's breaking down here? Yes and yes, of course. This happens all day long. These scripts never end. They run 24/7. They're running when you're asleep. News bots, buy programs, sell programs, selling gold, buying equities, all night, all morning long, all day, every day, from Monday through Friday, Sunday afternoon through Friday. All right, now I'm going to bring over a NASDAQ chart, which is NQ. That's the E-mini NASDAQ. That's tech stocks, right? And I'm going to bring over a Russell chart, RTY, which is the mini Russell that we have in the room. And now what direction would you anticipate those instruments should be going? Up or down? Think about it. What's NQ and what's Russell? Are they equities or commodities? So in other words, should they be doing the same thing that ES and YM are doing, or would they be look different, in your opinion? Would it be the same or different? Would it be up or down? What say you, team? NQ and RTY Russell. It should all look the same and it should be up. Give me a second here. NASDAQ's loading. It's got a lot of bars. Stand by 1 second, please. Just give me 1 minute and it's loading. It is loading, loading, loading. I'm trying to get it on the screen. This data is kind of messy. This data is very messy. Okay, I'm going to show NASDAQ first because it's just so volatile. Here we go. Here's a snapshot of NASDAQ. Now let's look at the apex of this sell-off over here. Now you can see here that this chart looks way different than the other two, in the fact that you've got these massive spikes down and these huge 100+ tick runs up and these massive spikes down. And the pullbacks are much deeper. They're deep. Compare the picture of the volatility you see on the left, just in the up move alone. So let me put this in perspective for you. You'll really get a good snapshot of what I'm talking about, right like this right here. So here's 1057 on, actually it was shotgunning, so technically 1057 kind of ended right in there. And then 1057 to where we're at now looks like this on NASDAQ. Hold on, this is kind of a woolly beast of a chart. Come on, calm down, Nazzy, you spazzy little thing. 1057 on ES is from this line here to here. This is the present bar on ES right here. This is the present current bar. See it? So on ES, you have had this many bars and that much movement. So what we're saying is that from 1057, which is the apex of the bottom, is this distance right here and those amount of bars right there. Okay. The equivalent time on NASDAQ is from here to here. What do you think? Oh yeah, you think it's much more volatile? This chart, in all due respect, is going up. I don't think there's any question. You went from 82.35 in the apex. 83.35 was 385. 5, 10, 20, 30, 40, 50, 60, almost 200 ticks. Yeah, right? Almost 200 ticks. 180, 190, 200 ticks. It's a $5 instrument. So it's a $1,000 move, very similar to YM. But look at how it moved. Look at the jaggedness of the spikes. This is buy programs coming in, and they're taking profits as they go up. And you get these huge spikes, spike up, spike down. And then you have this funky consolidation period right at the close. Whereas the other two, YM and NASDAQ or ES, and traded right through the close like it wasn't even there, straight up. And you went from 1234 all the way until 4 o'clock, where you just went sideways on NASDAQ. And then you continued the ascension up to where you are right now. Does that give you a good picture of the difference in volatility between these two instruments? A lot. Yeah, a lot's an understatement. You know, the algorithms that run against them are still by programs, but the way they execute against the different instruments is different. And so what you need to do now here, let's look at what happened at 11 o'clock. Where was NASDAQ at 11:07? Well, let's take a look. The apex of the sell-off was the same at 10:57, but 11:07 was way up here. So in that sense, it looks a little more like the YM chart after the bottom. So 11:07 was here on NASDAQ, somewhere right in here. So you had this amount of movement on that. Oops, sorry about that. From here to here. Would the fact that YM and NASDAQ are both going up and gold is breaking down reinforce the fact that you should be getting long on ES right here? Is that more evidence to support the case that you should be buying ES right in here? So we're saying how many correlations are intact to make that trade? YM is going up. It's already run 60 ticks, right? NASDAQ's run up probably at least 50, maybe more. And gold is selling off like a big dog. So when I have all these charts up on my screens, that's what I'm looking at. I'm looking at the correlations between the two. Now, let me give you another tip on how you can do this. Well, you might say to me, Charles, I'll tell you what, you're showing me a lot of stuff. Are you telling me I got to look at all these charts to just make a decision on whether I'm going to buy ES? Why don't I just look at gold and if it's going down, buy ES? Well, I like to have multiple correlations intact. And when I find that this, you can leverage yourself up more. You can put 2, 3, 4, 6 contracts plus on ES once all these charts are intact. What would be another way that you could track NQ and not have to stare at the chart? This is a little tip I'm going to give you. What would be another way you could track NQ and YM to see how they're moving? What could you do? Any ideas? Look at Apple? No? Here, I'll show you. I'm going to show you some good things. I'm going to show you good things you can do here. It's going to help you a lot. It's going to help you a lot. This is like a little tip thing that you can take to the bank. All right, check this out. I'm going to show you something here. Here's what you can do. It's really simple and easy to do. And this is what you do. If you want to track the movement of an instrument, what you do is you go into... No, you don't have to do it on the same chart. Let me show you a little trick. Here's a little trick, something you can just do. You could set this up tonight and do it tomorrow morning. If you want to see how another instrument movement is correlating to a trade you're looking to take, like the long on ES as an example. Okay. Let me show you something here. I'm going to show you something that's really easy to do, and you can do it right now tonight. Okay, hold on. Hold on a second. Okay, here I'm going to show you what to do. Here's how you do it. What you can do is you can put, if you say, well, Charles, look, I see gold's breaking here, but I don't have enough. I don't have enough, margin to put all these contracts on. I can't just buy NASDAQ and short gold and then put YM on and then still have plenty of capital to go ahead and start trading a bunch of contracts on ES. But I like ES. It moves slow. I'm comfortable with it. Here's what you can do. You can create what are called separate SIM accounts with the names of the instruments that you want to track. Here's how you do it. You go into your control center and you go into Tools, Options. Now in here you select the Simulator tab. And in the don't worry, this is recorded. I see people are, asking questions or say you got to leave or, whatever. This is recorded and we're going to post it on the website and we'll send you a link and we'll put it up so you can do this really easily. You see this little comp button? what you do is you go in here in these manage simulated accounts and you create a little sim account for each instrument. So here's CL, here's ES, here's gold, here's NASDAQ, replay that comes with it, sim comes with it, and here's RSL and here's YM. See it? See them all in there? Okay, cool. You do save, you close out of that, close out of that. Everybody sees that was tools, options, simulator tab, accounts. Create the name of the instrument you want to track. Okay, really simple. You're all set. Now you come over here, and in this drop down, I'm not going to show it because my live account's in here, so I don't want to do that. But in here, there's a drop down. Hit that caret, and then you select the instrument. So in the case of the gold trade, you put GC, and then guess what you do? That's a simulated gold. You're tracking gold, right? Let's say I want to see. Okay, well let's do it right now. Let's just do it right now. I have YM here, and I have NASDAQ here. Let's say, okay, I want to on my NASDAQ sim account. I want to see if I bought NASI right here. What is it going to do? So you put a buy order right in there. I want to buy YM here. I'm going to see if it's going to continue to head up, but I want to do it in sim, so I'll buy it in sim on the YM sim account. See it? So you're long YM, right? Come over here on gold. What are we going to do? We're going to short gold, right? So we're going to sell gold right here. Yeah, you make a purchase and a sale from each sim account that is in the same name of the instrument that you wish to track, right? So it's all in sim, and now you can track its movement. Now let me show you how you can do it in the control center. There's a tab in the control center that shows your positions, right? Let me see if I can get that tab loaded. Stand by 1 second, please. I think I got it right here. Okay, here is the control center with the positions that we just took. So you can see we're short gold, we're long NASDAQ, and now we want to take a sim position or a live position on ES and track it in relationship to the other trades that we've taken. Now you could do it on a live account if you wish, or you could create an ES sim account and track it like that. Here's one right here. Here's an example of it right here. See it? I just took this caret, dropped down, and selected the ES account. Now we probably would not want to buy it up here because unlike these other instruments which have retraced a lot, see YM's sitting right on the midband, so that should bounce right here. ES, you're way up here. You're just off the top. So in all actuality, you might just have to wait. You might have to wait until it pulls back into here to get long off the midband, like that. You can put a buy order down in here. Just put a buy limit right there. Or you can go ahead and buy it right now. See how it does. Yeah, they're like little watch accounts, Lewis. Right. They're like little watcher accounts. So the beauty of that is that with one window in the control center, you can control 4 or 5 positions, which are all in their respective sim accounts, and not necessarily have to stare at each chart. Well, you could use Chart Trader. You could put Object Trader on. I'd say for the sim, the sim thing you're doing just to watch to see how they're doing, you could all you want to do is put just a buy order, just a market, wherever you want to get in to track it, put it in and track how it's doing. So what I'm illustrating to you is how to not have to sit and stare at 6 charts all the time. You can just get these orders in and let them just do what they're going to do. Occasionally I'll use it. I mainly use Object Trader. But for the scope of what I'm trying to show here, it was easy to just pop it up and say, hey, just do this. But if you want to do it with Object Trader and draw a box, you absolutely can do it. No problem. Are there any crude traders here? Show of hands of crude traders. Folks, those of you that trade crude. With Gary in the live room. Gary, of course, is our resident crude expert. Let me get a crude chart up here before we wrap this puppy up. I know some of you are asking what to do with crude. Now, there was a significant event that affected crude oil today. Does anybody remember what it was? What was the event that affected the movement on crude oil futures, CL, that occurred today? Anybody remember? Anybody trade crude today? Exactly. Crude oil inventory. Now let me show you how we track that. Stand by. Most of you have this bookmark, but some of you might not be aware of this financial tracking tracking website that we use. It's called Forex Factory. All manner of things that affect the financial markets, including movement of crude oil futures, the dollar index, currency futures, you will see on this site right here. So you definitely want to bookmark this and check it every morning. And when you have news that's significant, you really want to not be trading when this significant news comes out. So you can see normally crude oil inventories are on every week at 7:30 on a Wednesday, 7:30 a.m. Pacific on a Wednesday. However, Monday was the Veterans Day holiday. When you have Monday holidays, crude oil inventory is pushed to the next morning at 8 a.m. Pacific, and that's when it came out today. Now, you know, if you trade crude, you know that you want to be flat going into the news because you generally get the news bots kick in. Now, how would you expect that the news bots would react to a build in inventory? So the inventory was 2.2 and the anticipation was a build of 1.5. So it's 1.5%, 150% higher than the prediction. What would you expect the news bots to do with that information? Would you expect sell programs to come in or buy programs to come in when there's an increase in the build of inventory? Now, this doesn't only work perfect. Okay, when we show you things, we are showing you things that are of a high probability to take and trade. But we're not perfect. We're humans. We're not robots. We're not algorithms. We're not news bots. We're people. And so we have to trade what we see. So let's look at when the news came out, and the correct answer was you would expect it to sell off or drop, right? Okay, so let's come back over here and take a look at what our friend Crudy did right after the inventory numbers were released. Stand by. It's going to load a little bit more of the chart here. Now, this is a good approach to crude. I know Gary was frustrated. I was frustrated too that into the news at 8 o'clock, which was located right here on this chart, the beginning of 8 o'clock was located right here. And so going into it, there's an extreme amount of tight range-bound choppiness because the markets are going to wait to see what that number is. 8 o'clock starts here. 8 o'clock ends right over here. Like that's 8:01. So all these bars are shotgunning in a minute. And you might look at this and you say, wow, that's a great short. Why didn't you just get in here and short this thing, jump in? Where was the proper entry of short if I was to put it on this crude oil chart, either time-wise or dollar-wise? So you would say something like, this isn't the correct answer, roll over at 57.10, roll over at 57.70, or the time might be, I'm just going to throw it off, 13.59. After the inventory, I'll help you out. There was a short entry, but where was it located? Give you 5 seconds. After the inventory number came out, either time-wise or dollar-wise on the right-hand side of the chart, would you identify the proper short entry on crude? And then we're going to wrap. By the way, if you're in a combine with either Top Step or One Up, most of you know, of course, that major news like that, well, you should not be in a position until I think it's one or 2 minutes before and after inventory or major news. So you have to wait. 3 seconds. Dial in your short. Where's the short entry on here? 1 second. Get your call in. Make your call. All right, time's up. So let's look at what happened here. Whenever you're in a trend, in this case it was down, it's the opposite of the uptrend. So obviously you're going to have a solid red background. The midband and all the bands are going to be stair-stepping down like such. The color of the bars themselves will predominantly be red, right? And then you will put in a series of what's called thrust and retracements. So in this case here, coming off the news bots pushed it down as expected, and that's called the thrust part of the move, and it was down. Background turned red, midband turns red, and all the bands start stair-stepping down. So we know we're looking for shorts. We get a nice retracement off that swing right to the midband, sitting on the midband itself. So the short entry, if you called it, was located right here. And you were correct. So let me give you a time and dollar perspective on where that was. If you said anywhere between, say, 808-ish to 811-ish, and I see a lot of you had 809s and 810s, you were correct time-wise. That's where that box would have been. From a dollar perspective, if you said anything between about 57.40-ish to 57.45, 46 inside of this box here, this little 5-tick, 6-tick range, if you draw it as I have shown using the Object Trader tool, you were filled short with a market order on that bar right there. And then you just had a precipitous drop. Stand by 1 second, please. Sorry, I had to take that. My apologies. Yeah, Jakir, let me explain that real quick. And this is part of the art and the science of trying to take these trades, is that on the Object Trader panel, there are objects that you can use. You can use a trend line break, you can use a box, you can use a wedge. If you've seen the tool, Gary has instructions on how to do this. I suggest that you watch them. I personally, one of my go-to approaches is to draw a region box, which is basically a rectangle where I intend to take the trade. In this case, it's at the midband. And you can see that these bars sat here for a while, forming a little collection of what becomes a region box. In the case of the downtrend, you would enable short only here. Now, the reason you do that in a big sell-off on crude after that bad inventory number is that sometimes the bars can go a little bit higher, and you don't want to be faked into a long trade. If a couple bars go up like that and you enable both sides, you can get faked into a long and then stop out when you should be getting short. So in a downtrend like this, you would enable only short, and if the bars go higher, we don't care. We'd have to rebox it up here. Okay? So you simply engulf the bars where you want to enter, you enable the short, and when it closes outside to the downside, a market order is sent to the market for the quantity of contracts you have in there, 1, 2, 3, 4, whatever, and you're filled at the close of that bar right there. In this case, that would be somewhere right around 38-ish short. Okay. Well, you have to be patient when you take these trades. You have to wait for all these bars to form, and you wait for here. Let me do this. Let me get all this stuff off of here and show you. I'm going to show this really quick because I'm 10 minutes over, and I actually got to step away. There are webinars that we have that will explain this in great detail. In fact, I've taken several webinars, and they're available to you both in the subscriber area on the website too, where it goes. The whole hour was spent showing how to draw boxes. Yeah, so I'll do a little bit here, but if you want for more detail, you should definitely go and look at the ones that were dedicated. I'd do at least one or two of Gary's Object Trader webinars, where he spends a whole hour talking about the tool, and then in some of my box webinars, where I go through in detail how exactly and where to draw the box. But I'm going to blow it up, and I'll take a second to do it right now, real quick. Okay. All right, here we go. All right. Now, can you see that as we approach the midband here, that you get a series of bars that are starting to turn the other direction, which is down? So what I do is I like to watch this. Can you see this indicator right here? I want to show it. This is a little trick that I use. Well, before we can talk about stops, let's talk about the trade entry, and then we'll talk about how to manage it, okay? I'm answering your question on how to know where to get in. This is a really cool little indicator that is of a lot of value to you. Can you see these little dashed lines? When did the dashed lines stop going up? Was it here? Was it here? Was it here? Was it here? Or was it here? When did this stair-stepping of these dashed lines, which is a swing high-low indicator that's on every chart, stop going up? Right here. Correct. How do you know that it's not going any higher? How do we know that those dashes aren't going any higher? Well, let's just take a quick look. What about how high these bars are going right here? Are these bars right here and these bars right here going any higher than that? Are any of these bars here going any higher than that? No. No, they're not. So where would you put the top of your box? Would it go here, 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 or here? Yeah, the top of your box goes there. Here is the top of the box. Now, how can we establish where the bottom of the box could go? Is there any place that you see where the wicks of the candles are all aligned with each other on the bottom side of where the wicks or bodies of the candles are forming? I'll give you a couple spots. How about here? How about here? Or how about here? Would any one of these three places of these lines at where the bottom of the candles and the wicks and the bodies are forming little sort of micro support areas, would those be candidates for the bottom of your box? What do you think? So in the case of this one here, your box would look like this. This box would look like that. Or if you drew it earlier, your box would look like this. If you had drawn the box in the formation that I've just shown you right there, on the earlier box, if you'd drawn it, you would be filled short on a market order on the close of that bar right there. If you'd not drawn the box until later, your short would be right here. So you can see the more aggressive you make the bottom of the box to get filled short, the higher the fill. Now, if you had drawn a box that looked more like this, top of the box is here, we see that, and that you put the bottom of it here, where would you be filled? Well, on the close of this bar right here. Short, market order, right? And if you'd drawn it as the larger box with the most conservative swing of this candle right here, and that box would look something like this, where would you be filled short? On the close of that bar right there. Same as the other box. So there's only 3 candles. If you've drawn any configuration of box that I've shown you right here, I've shown you 1, 2, 3, 4 potential box structures. All of them would either have been filled on that bar, or this bar. So what you want to do, one of the things you can really do is just, are there other ways to get in? If you're kind of in a hurry and you don't want to draw boxes, could you put limit sell orders in under here? Sure. Right? Could you put sell orders in here and be filled? Yes. Now, the way we structure it is that you wherever your entry is, let's say it's on this bar 38, and you add 12 ticks, so that puts you up at 50. So if you add 12 to your fill, your initial stop is 12 ticks above here, which is located right here. Do you have to leave it there? Let's say Object Trader puts your stop 12 ticks above your entry. Do you have to leave it sitting up here? Just let it sit up there, or can you move it? Could you maybe move it down to here and lower your risk? Yes, of course you can. In fact, we recommend that. Well, the way we do it is if you can put 2 lot on, we want you to get usually somewhere from 6 to 8 to tick 6 to 8 to 10 ticks will be what's called your scalping target. Let's say you were filled at this 38 level and you wanted to get down and you wanted to get 8 ticks. You would put a buy to cover at 31. So 31 would be located right here. If you wanted to get 10 ticks on a scalp, you would have a buy to cover at 29. 29 is located right here. If you wanted 12 ticks, you can do the math, but that's your scalp. Once you get the scalp off, what do we do with our initial stop? Do we just leave it there? Once we get our scalp off, what do we do with our initial stop? So you have 2 contracts filled short. You took one off at OCO. There's only one left here. You just leave it sitting up here? Just leave it there. What the heck? Let's just see what happens. What's going to happen? I don't know. Just let it sit up there. I don't care. Whatever. No, you may move it right within 2 ticks of your entry. Exactly. So in this case, you would come bring it down to here. And then as it starts to move in your favor, you trail it down. And the trade probably ended somewhere down here, depending on the tightness of your stops. So that was leg 2. Right here. So good trade. Say you made 10 ticks on your scalp here, contract number 1, contract number 2 from 38 to, I don't know, do something around 05, 33, 43 ticks. So how much was this trade worth? 10 ticks and 33 ticks for 43 ticks short. How much is oil worth per tick? So how much is that short after crude oil inventory that you entered that about 8-9 minutes after the inventory numbers came out, and you exited at around 8:30, so you're in about 20 minutes, roughly, plus or minus a couple minutes. $430. $10 a tick, $430. Good. Nice little trade. I had to leave the room. Did Gary stick around and take that, or did he close the room? I don't remember. I think we closed it. I can't remember whether he called that and took that or not. Anybody remember? Okay, cool. Oh, it was closed. Oh yeah, I think we closed it and then this set up afterwards, but you could have taken it. Okay, any final questions? Did I answer everybody's questions? Do you everybody sort of understand how we're doing this here, how that works? Various correlations that we covered tonight between gold and the equities. We talked a lot about volatility of different instruments and how it plays out, particularly contrasting ES with YM, and then ES and YM with the Russell and with, oh, we didn't get to the Russell, NASDAQ. The number of bars and the volatility and how it plays out. Okay, John, thanks for coming. Brent, Jagir? Yeah, it takes a little time. It takes a little time. You have to. It's muscle memory for your trading brain. You got to hear something, hear it over and over, see it, see it, see it. Practice. Take it a little bit yourself. I strongly urge you to set up those little instrument specific little sim accounts, and you could put two, three different, especially if you got a couple, three, four. I've got four big monitors, but even if you had two monitors, you could put your tracking instruments on the left. Maybe you put like YM over there, and maybe you put gold over there, and then you can put crude and ES on another chart. Whatever you're going to trade, put some instrument specific sim orders on. Look how. Oh, well, let's do that. Let's see how they're doing. Here, let's circle back. Yeah, just take your time. Give yourself some patience and time to learn this stuff. Because it's not too complicated, but it takes practice, and a lot of times it just doesn't come overnight. A lot of people, what I've seen over the years, eventually at some point there'll be a what do you call that? A big idea light bulb that pops over your head. Eventually you'll get that. But it's gonna take a little bit of work and some practice. So let's see what's playing out here. So YM's about break even on our little sim entry here. Nasdaq, we were long. It went up a little bit, a couple of 4 ticks. Gold is up, 2 ticks, and ES is just kind of dinking around here, slightly down. Okay, Bill. Yeah, you get the aha light bulb moment. I'm going to turn the recorder off.